Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, February 4th, 2024. Hope you guys are having a fantastic weekend, and let's get started. So, Thursday night, I had said that I wasn't really too sure what was going on because we had a decent little drop in the market, but the thing is that we didn't have the NIAID was not going down with it. So I left the door open where you can actually see, this is the S&P right here in the black, but you can see it really well as far as a defined wave structure where you have your wave 1, 2, this is 3, 4, and 5. Now, the one thing that I'm noticing is it just like what I put on Thursday, where we didn't really have any kind of decline in the NIAID when we had that big drop. But now notice we're at new all-time highs right now, and the NIAID is heading down. So something is going on right now. There's a disconnect, and it's something that I've been saying, and I'll say it again. These indicators, the piper's going to have to be paid, and I think the more they continue to try to drive price up without having any kind of, say, normal resting period, and these indicators keep giving, sell signals, it's just going to make the move down a lot more fierce. And we saw that on Thursday with the S&P down, or Wednesday, I'm not sure which one it was, where we had the big drop. But in any case, we saw the S&P lose 80 points. And, Friday it was back up again. So there's something going on. It's just telling us that there's a very select few stocks that are really moving this market. And a big piece of it was Meta on their earnings, as well as Apple, I believe, whoever reported after that. But they're the tech stocks that have been really bringing things up. But this disconnect it's something to pay attention to because, as I said, it's going to be paid, and the payback is going to be a really, really swift move to the downside once things kick in and support gets taken out. So let's just take a look at some of our other charts that I follow. And hang on one second. And again, for the S&P being up over 50 points on Friday, notice the put call ratio. We have people that are buying puts right now. So this move is being it's not being taken in with both arms on this. There's some really contrarian indicators going on behind the scene that are saying that this market is not as strong as people are thinking. So I'm just going to show you one last. And this is the stocks above the 50-day moving average. And again, just notice how the S&P is at all-time highs, and this was actually down 9%, stocks that are above their 50-day moving average. So there's, like I said, I don't know when this kicks in, but I'm telling you that, it's becoming very dangerous every single day. And the fact that the Fed is really trying to kick the stool out from the bulls, it's going to be very difficult for them to find reasons to bid this market up. And as something I've been saying for quite some time is you're going to get your valuation traders that are going to say, the S&P with a PE of 20 or 21, we're at levels that you really don't see these that until we had that, I think, at the dot-com bubble. We had it when we saw there was a couple other times. But in any case, the valuation traders are going to step in at some point and say that this market's there's just way too much risk holding it. So, as I said, I'd left the door open for a wave 5 up, and that's pretty much exactly what was playing out with it. Instead of this being the start of it, where we had 1, 2, 3, 4, 5, when we had the drop here and support held. And again, I didn't see the NIAID or the put call ratio really reflecting the drop. This was the wave structure that I liked, and that's what played out. So the thing is this, on the hourly chart, this is a pretty strong move on momentum. So the odds are that most likely what's going to happen is we're going to get a little bit of a pullback. And here you can see on the 15-minute chart that we do have some bearish divergences. So as I was saying, with the way that I believe this will work out is we will get some kind of pullback, probably down to the 50-day moving average on the 15-minute chart, right around the 49.30. It could go a little bit deeper than that, and maybe come down to the 4,900. But what will happen is that will, if we get that little drop, that's going to bring our momentum indicator down and start to give us a bearish divergence. And the fact that we already have the bearish divergences on the daily chart, again, seeing a test of the 200-day moving average makes the most sense. And this has always been, once we do break, this is the area that I'm anticipating we are going to see the pullback go to. So just looking at the some fib retracements where, let's just say this was the high, if 50% move brings us down to 45.35. But again, if we come and look at this, a 62% retracement from here is probably more likely, and that's going to bring us into the right between the 4,500 and the 44.65, and that will probably, I think it's going to happen in a fairly quick way. And kind of my preferred pattern is that whenever when this does take place, whether it stops at the, we get the decent pullback, then what happens is we're going to get that euphoria run into where, where we're anticipating the top will be. And from there, just expect a very volatile with a bias to the downside, probably into the election. So, that's really the roadmap that I'm looking for right now. But as I've been saying, until we see support go, which right now, the first line of support is at this 49.31, and then from there, if it gets taken out, we're really, you have this is really the support zone, the 49.32 down to the right around this 4,900. So if this gets lost, that's where we start looking at the next line of support, which will be down at the lows that we made on Thursday, which is at the 48.46. So this is it. Once that gets taken out, again, what happens is we then start looking at the the next level of support, which would probably be down at the 200-day moving average, and that's just at the this is only an hourly chart. So this would be the next support area, and that when that gets taken out, that's when we start anticipating that we're going to get this move down to these levels. But really, the first thing the Bears have to do is get it through this support level first, and then see what happens when we get down to this support level. And on the upside, again, it's kind of hard to say where it is, but I'm just using round numbers. So, look anywhere. We got pretty close to the, we got up to the 49.77. Maybe they try to take it to 4,500. 5,000. It's tough to say. Like I said, it doesn't. I think this market's way ahead of itself. But as of now, it's just been ignoring everything that's been out there. But it's ignored until it's not. And I think when it's not ignored, that's when we're going to see some panic selling. But right now, the bulls are bidding everything up, and they're not really worried about too much that's going on. But time is not on their side with this. So anyway, let's see what plays out tomorrow. Have a great rest of your weekend, and I'll talk to you guys in the morning.